Hi, and welcome to the podcast channel for Podcast My Business and also for video content madeasy.com.au. And today we're re-welcoming Karan Anand for a special edition of Budget on small and sole traders and some thoughts on that. How you going, Karan?
Really good, Tony. Thanks for having me back on the show.
All right, and I didn't mention it's hnry.com.au. Cool, okay. So we were just talking before that you've been doing some interviews and some work, considering the budget's only been out for, coming up to 2 weeks? Yeah.
Yeah, not even 2 weeks.
So, and you've got some information on that, and we're privileged to be first off the list, shall we say. So it'll hit my site before it hits yours.
Yeah, that's right. Yeah. So I'm happy to share some of the insights and how they affect sole traders and small businesses. So should we crack into it?
Well, let's crack into it.
So I think this is probably the most consequential tax reform budget that I can remember, probably going back at least 20 years. And Tony, I'm not sure if you'd agree with that, or if you're probably going back to the Howard era reforms around GST and capital gains tax going the other way, which is probably the last time we had such a significant tax reform budget. And it cuts across. It impacts every Australian, whether you're a business owner or not. So from a small business or sole trader perspective, I think there are, particularly from a sole trader perspective, and when we look at our customers at Hnry, you have to treat them both as business owners and you have to treat them as individuals. And I think there are clearly pros and cons as it relates to both of those. I think the good news and perhaps this has been lost in a little bit of the rhetoric, is for the sole trader who is a business owner, it's actually a reasonably favorable budget. I mean, if we go through some of the key highlights, the main thing is that they have the government's decided to make the $20,000 instant asset write-off, which has been a hallmark of the last 4 budgets, but on a temporary basis. They've decided to make that permanent. And if we think about the class of customers who are a class of individuals who are sole traders, you're earning anywhere between $30,000 to hundreds of thousands of dollars a year. So $20,000 instant asset write-off, not having to worry about the depreciation, not having to worry about whether this is going to be a thing year on year, is a huge win. And I commend the government for instituting that. That's alongside the benefits available to individuals around the instant $1,000 instant tax deduction. Now, most sole traders and small businesses would claim more than $1,000, and so you're like, is it really relevant to me? But in the event that turnover is lower, that's available to you anyway. Then there's a couple of other things which impact individuals as well, around the $250 working Australians tax offset and some changes to the legislated tax cuts, which they'd already brought in, announced last year, with the lowest tax bracket dropping down 1 percentage point this year and then 1 percentage point the next year. The last point from a business perspective, which I think is favorable, is that the small business capital gains tax concessions are staying exactly as they are. So whilst the individual capital gains tax concessions have changed materially, for small businesses it's still the same. So that includes things like the 15-year exemption, active asset reduction, retirement exemption, all those things which existed. You'll still pay the same CGT when selling your business or your business assets as you did before this budget. So that's a favorable thing. Obviously, on the other side, a couple of key things which I think are less favorable, clearly, which is one is the change in the way capital gains tax is treated. Obviously, we're going from a 50% discount, which would have made your notional highest tax that you'd pay on any asset sale 23.5%, to now being a minimum of 30%, going up to that 47%, which is a big jump. And then changes in negative gearing, which whilst only impacts the subset of Australians who own property, we know for a lot of our customer base, they have invested large amounts of money in the property journey in Australia, and that's where a lot of their potential retirement savings are tied up as well, and so that makes a huge impact to that too.
Yeah, I as well. I've got property. I'm thinking, we'll see how it goes. But also one of the things is to do with venture capitalists and raising funds. There's a bit of a controversy about that.
There is, and obviously Hnry is a heavily venture-backed business. We've raised about $100 million in venture capital, and we've got a number of funds who have supported Hnry through the journey. There is an interesting story here. So there's a few threads. If we just unpack those threads, the first thread is about, is Australia an attractive place to start a company? And whilst the changes in CGT are concerning as it pertains to the the long-term value that you can create out of business, I don't think you start a business in Australia because of the tax settings. You start a business in Australia because it's an awesome place to live, and it's probably where you live. And so is that fundamentally going to mean that there are a truckload of aspirational unicorn founders who, before founding their business, are going to leave the country? Probably not. But it is going to make changes in businesses who are scaling and deciding where they decide to domicile themselves overseas. But that's always been the case. I mean, there's this argument now to move your business over to New Zealand because there's zero capital gains tax in New Zealand. And as a New Zealand founded company, for us, that's a interesting and a pleasant thing to hear. And if any Australian founders are looking for a pathway into New Zealand, happy to have a conversation around operating in New Zealand. But I don't know if that first message has been overplayed. The second message is around the impact on employee share schemes, which is a way that a lot of early stage companies incentivize their staff, is through, look, we may not necessarily be able to pay you top dollar, but when you join our company, you're going to become a member of our employee share option pool or employee share scheme. And from that, you get the right to earn alongside the growth and the valuation of the company. Employee share schemes have their own tax treatment here, but on the sale of the shares, it's treated as the same as normal capital gains tax rules. And so, they're looking at it going, previously an employee would have to have paid anywhere between, again, X percent up to 23.5%. That's now going to go up between 30% and 47%. So it's a significant jump up. Again, is it a reason to not join a startup because you're having to pay tax? It's not. It's the same argument saying that you earn $200,000 a year. Do you not ask for a pay raise if you've been stuck on that salary for 5 years because you don't want to give 47% of it away to the tax man? Of course you ask for the raise if you think you're deserving of it, because it's still more money. But it is a bit of pill to swallow. Then the last argument is that it will stifle innovation and capital inflows into the country. And I think that's a concern that needs to be shaken out, particularly because the Treasurer has been open to further conversations, and he's convening a group to see how he can carve out special considerations, because he's conscious that he doesn't want to stifle the innovation economy. So I don't think it's baby out with the bathwater time just yet for venture capitalists in the startup sector, but certainly this has presented an unwanted shock. And certainly I'm sure your LinkedIn feed is the same. Mine is just full of antagonistic comments in relation to changes in the capital gains tax in particular.
Yeah. Look, it's interesting. I'm paying more tax this year and last year, and that's a good thing.
Yeah, hopefully it's because you're earning more money, and hopefully it's not because of bracket creep, but it's probably both, right?
Yeah, well, one and the other. You pay more tax when you earn more money.
Yeah, exactly.
So if you pay more tax, you should be happy.
Yeah.
But yeah, if you can pay less, then fine. And I do like the instant asset write-off as well, so I can buy a new car every year.
Yeah, exactly. You buy a new car every year and you write it off. Obviously, there is not a common, but there is a misconception that an expense, writing off an expense means you get a refund for the government. Obviously, you only get the amount that is the taxable amount back. And so, as with all expenses, do make sure that it's actually what your business needs at the time. So, Tony, you need a new car every year, then you do you, but I don't think every business needs a new car every year. So.
No, they don't. They don't. In fact, I got audited many years ago when I was working from home, long before it became a big thing. and the ATO decided to audit me. And I said, well, I followed your advice. I did everything that you said and blah, 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 blah. So I'm not going to get a fine. He said, look, what you should do is register your vehicle for business. Don't register for private use, register for business use, and then we won't look at you.
Yeah, interesting, interesting. On the point of auditing as well, that's the other thing as well, is the guidance that we've received as tax agents is the ATO definitely, and they have been so far in the last sort of as the post-COVID relief and some of the amnesties they had going, they've worn off in the last couple of years with their new super AI powered data analytics engines. They are coming after particularly small businesses much harder because they have a huge small business debt pool that they need to reclaim. And so I think that audit thread is an important thing to raise, because if you don't have your books in order, there is a chance the ATO will come knocking, and they are looking to chase down debt.
Yep. Yeah. Never assume that the ATO is saying to you, oh, look, don't worry about it. They're saying to you, don't worry about it now, but worry about it in the future. And when
Yeah,
we want it,
yeah, yeah,
we
yeah,
want.
yeah, yeah, exactly. One of the interesting things that came out in the budget as well is there was $10.9 million, which has been provided to the ATO to extend and formalize the pilot they've got around going, inviting small businesses to go from quarterly pay-as-you-go tax installments to monthly pay-as-you-go tax installments. We at Henry, we obviously we're the nth degree of this to the other extent. So we're real-time tax pay-as-you-go, and so the ATO is sort of catching up slowly to where Henry's been for at least 8 years in New Zealand and 5 years here. So we welcome that. I think that's a positive step. Right now, it's only opt-in, but the underlying thesis, as much as there will be some businesses who want to hold on to their tax funds as much as possible, the underlying thesis around this is actually allows you to more dynamically calculate, which is again what Henry does, your effective tax position, and then pay the right amount based on an ATO approved calculator using some software, e.g. Henry, rather than you paying an arbitrary amount that they've set aside based on last year's earnings every quarter, which may not be a true reflection of the lumpiness of your business. And we know for a fact a number of our customers work in very lumpy income cycles. And so a nominal, true up of last year's paid every quarter is actually can be quite damaging, in fact, from a tax liability perspective.
Yeah, you're right. And it's a interesting position because, yes, it's nice to have that money in your account earning you money rather than giving it to them and them earning money. But the reality is it's their money.
Exactly, exactly. And the effective hold period on a quarterly basis that you'd hold it for a quarter is 90 days. So if you assume you receive some payments at the start of the quarter, some at the end, you might hold it for 40 days. To your point, it's not your money, it's their money. Um, and so how much interest are you actually going to accrue, and how much effort are you putting in to move the money into a savings account, move it out of a savings account, for a few days of extra interest collected. It's a lot of headache. If you get it wrong, you get a fine, which negates the interest plus more. I mean,
Yes.
that's the genesis of Henry's slogan, which is never think about tax again, is literally to make this problem go away. The administrative overhead and the cost associated with it is not worth the marginal upside of a few dollars extra interest every quarter.
Yeah, absolutely. And you'll start bugging them. And again, I said to people, look, first thing you need to do, set up in your business, is to set up a separate account for the
Yep,
business.
yep, yep, yep. Absolutely, absolutely. Treat your business and personal income separately, and make sure you manage it that way. Just because you're self-employed or a sole trader and you're working for yourself doesn't mean you should be commingling these things.
So again, they'll come looking, and it's much easier. Here's my books, here's my accounts, have a look.
Yep, yep, exactly, exactly right.
Cool. Okay. So any other little gems from the budget itself?
I think we're going to watch there's probably a couple of things that we're going to watch. One is what the impact on the housing market is. I mean, this is a big bet that the government's made that there's going to be first home buyers who are going to be able to access the housing market. We're going to see a tapering of price growth. So we'll look to see what happens with that. We'll also look to see whether some of the plans that they've got around uh, um, uh, expenditure changes, particularly as it pertains to things like the NDIS, whether they start to improve the budget outcome. I think one thing that I'd probably remark, which was a little bit disappointing from a sole trader perspective, is they instituted this policy in the budget around lost carrybacks. Essentially, companies with turnover under $1 billion will be able to carry back a tax loss, so they can use that loss in the current year to claim a refund against the tax they paid in the previous years. Unfortunately, it's for companies only. So our demographic, unincorporated sole traders, who make up the majority of Australia's small businesses, they don't qualify. And this really could have been quite beneficial because if you think about this is the cohort who actually, particularly in the early stages, suffer from any sort of economic shock or economic volatility where you'll sort of see an outcome like this and you'd want to be able to then chase it back in ensuing years. So I feel like that's a bit of a missed opportunity that's only restricted to companies who actually have generally got better cash buffers to sort of carry in years forward. So I think that's a bit of a miss, and hopefully that's something that can be rectified in the future.
Yeah, it's an interesting point how many sole traders there are, and there's never anything really for sole traders as such. It's always bigger businesses. And I remember in COVID, and then I was a sole trader, and I knew lots of crystal huggers, I would call them.
Crystal huggers, you have to explain that to me.
Right. So I would go to networking events, and there'd be people there that there's just them, and they don't make it. They don't pay GST
Yeah. Yep.
because they're too small.
Yep. Yep.
And I'd say to them, "Well, how's your PAYG going?" "Oh, I'm proud I don't have to pay GST." I'm going, "Yeah, but your turnover isn't huge. You mustn't be making much money."
Yeah. Yep.
"Oh, it's fine for me," and about markets and things like that. Then, of course, COVID came along, and they whinged about not getting any money from the government. I said, "But how? You got to pay tax to get something back."
Yep. Yep. Yep.
So maybe there's an element of that as well. The government's thinking is that you're not paying that same level, and is there enough fat on the cow to pay something out to them?
Yeah, look, I think it's I don't know what the thinking is, and I think you may very well be right. There's also, I remember working through during COVID, just from as accountants providing accountants letters, and having a lot of customers, as you're describing, the crystal huggers, who are below or just below the GST threshold, who were they weren't able to access government grants, and are sort of frantically helping them pull together accountants letters. But the guidelines were very explicit that you must have been GST registered for the last 2 years. I think it's a simple proxy for business legitimacy, which is disappointing to a certain extent because every Uber driver, rideshare driver, taxi driver has to be GST registered by law. But other businesses, if you're starting out and you've been able to make 60, 65 grand a year, it's not great, but it's still, that's your livelihood. And then to your point, if you're operating in a market that's shut, you're still entitled to it. So, I think retrospectively looking at COVID era policy and how the government responded is, it's easy for us to talk about 5 years down the track. But I know there were a lot of our customer base earning in that 50 to 70K range who really, really struggled, and they were excluded from those grants. And so, they doubly struggled when someone making 85 grand was able to access the grant, and at that range of income, it's material. So I feel for them, but I also understand your point going are you operating a legitimate business? Is me providing you a leg up here actually helping your business, or is there something else going on and your income is actually derived from other sources, perhaps being undeclared?
Yeah, there's always some opportunity, shall we say.
Yeah.
I was thinking about something, I can't remember what it was now. It's left me. It's to do with tax and sole traders and oh yeah, it's not hard to register with an ABN. Surely is an ABN enough?
Yeah, it's a good point. It's not, and I think we're at a point from a data perspective where you can provide more sophisticated rules on top of an ABN is being registered for GST enough. So how active is your ABN? How much income have you earned? Like all that is reported to the tax office. Is there an income threshold which is more representative? Is it frequency of income? Is it consistency of income? Those things are readily available to the tax office, and particularly as they move closer and closer to now they've gone from quarterly to opt-in monthly. If that goes well, I assume it will become compulsory monthly, and then you can sort of follow the thread there. The more you have that, the more you have quality of underlying data of those businesses, and then as a government you can make better informed decisions. Now this is the conversation we're having with them because we have real-time data in and out, and so we're like, we know this better than you, in fact, because it's not lumping together quarterly for us. We're seeing every dollar go in and go out as it's spent and as it's earned. And
Yeah,
then
then do we get into other
decisions.
areas about, data? Like when you go to see the accountant, they know how much interest you've earned because the ATO knows how much interest you've earned.
Yep, yep, yep.
So is there more surveillance and more of a surveillance society these days? Is that necessarily a good thing?
Now you're getting into questions above my
And
pay
we'll
grade,
park it there.
Tony.
It's a hypothetical. You don't need to answer. I'm just thinking, you know what? It's all this data that's swimming around. There's lots and lots of data. And as a business owner or practicing in business, it's very hard to keep up all these sort of things, which is
Yeah,
where you
it
guys
is.
come in.
It is, but also you have to take that into account. With the shadow economy is a real problem.
Yeah, yeah, yeah.
There are reasons why it exists, but a number of those reasons are generally malicious. And so the rest of us who are the actual the taxpayers who do the right things are still funding the public services of the ones who are non-conforming. And so that doesn't sit well with me, and I'm sure it doesn't sit well with you
No,
either.
no, exactly right. Yeah. And that's why, again, those little ones that would, from my perspective, would pretend they're in business. I go, but if you're not paying GST, then how big are you? And if that's your business and your income source, then how are you surviving? How are you having children and whatever and having a car and whatever when you're not making any money?
Yeah, 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 exactly. And that's where I think the thesis of Henry, which is where payment systems are naturally linked to compliance systems, which is not, business activity happens and compliance activity happens separately, but it's actually a natural flow where compliance is just a byproduct of business activity, which is Henry's basically core product design philosophy. Then you don't have these issues because I'm using your software to manage my business, and compliance happens as a result of it. Whereas traditionally, accountants and accounting software, it's something you take through a bank feed. So you can manipulate the bank feed. I choose what to put in there versus not to put in there. But actually, everyone needs to put their things into Henry because it's where I manage my invoices. It's where I understand my cash flow. It's where I understand my business position. So if I don't put the information in there, I don't know how to manage my business. And then we do the tax stuff as a result of it. And that's I think I think perhaps that's where we're going with this line of thinking, is to go, if payment systems and tax systems are more naturally aligned, then we get the dual outcome of better business owners, better informed, and less of this sort of shady shadow economy behavior happening. And then we can have a proper discussion on, are we paying the right amount of tax, or are some of us funding those of us who are not doing the right thing.
I don't know anything about that. I don't know anything about where you have expenses and whatever and you play around with them and do whatever. No idea what you're talking about.
Responsible tax agency,
No,
we have no
that's
idea.
right. No idea. So can we look forward, and we'll wrap up on this, can we look forward to getting some money from the government for the oil crisis that we're going through?
Well, I think that was put forward as quite a large fuel package was put forward by the government um, in this budget, and obviously that's on the back of some the excise relief that they'd already given a couple of months ago. And I don't know if you've experienced it, but I know I filled up fuel in early March and then again just recently, and I did notice a reduction in the amount, the cost of petrol at the Bowser, which means that the excise relief is passed through, which is the right thing. And then hopefully what we can do now is, as a result of some of the other packages they sent through, is shore up our supply so that we then stave off other shocks like this, which have been hugely impactful around the world.
Well, to be fair, the government has done a good job on that aspect, and we've got more fuel, all fuels, than we had in February.
Yep, exactly.
So, I'll give credit where it's due.
Yep.
And as far as prices go at this stage, I use 98, and the top of the cycle was what, $2.24. We're not there yet. So even then, I think we've stabilized.
Yeah, exactly.
Yeah.
Yeah, I
And
think
let's hope we stay stable for now. But until what's his face.
yeah,
I don't think there's anything more we can say on that, is it? It's just
sure.
it's one of those things. There's too much to say on that. So I think we'll park on that. All right. Anything else you'd like to add?
No, I think that's all, Tony. This has been a great chat. Thanks for your time.
All right. Thanks very much.
Thanks, mate.